So let's see. We're talking about headlines say crisis. Economic data says otherwise. And that's pretty amazing that what we're seeing and hearing is completely different. Headlines say crisis. Economic data says otherwise. Well, the reason we say that is because the economy continues to show surprising resilience, despite concerns surrounding higher energy prices and the conflict involving Iran. Maybe that's over. Maybe it's not.
It's still not guaranteed that we're done. We have a memorandum of understanding, but that doesn't mean we have a peace deal that is packaged and delivered.
Yeah, and I won't mention who, but I talked to a congressman last night. I was talking to him, and he talked about something, and we saw in the Wall Street Journal, you've seen different things. He says one thing they're not listing is a snapback provision, because we don't know, but there is a back door if things don't go well. So hopefully they do. Hopefully we get what we want. And there was some other things we talked about, you and I, that were left out that they should have mentioned, but that is something that is again, Iran is a wild card. Many investors expected consumers to pull back as gasoline prices surged, and headlines focused on geopolitical risk. Instead, economic data suggests that the U.S. consumer remains in good shape, and they keep spending and spending. It's amazing. I think I saw last week that the retail sales, I think they were up 0.9% ex gas and or energy. I think energy and food, I think it was up 0.5. Do you have the numbers?
I got the numbers right here.
Oh, okay. Well, why am I talking about it? If you got the numbers, I'm guessing.
I like to look year over year, month over month. Sometimes it kind of creates a little bit more volatility in it. So that year over year number, you're comparing, like let's say just Amazon Prime Day for some reason popping in my head. If you have Amazon Prime Day in June, you want to compare June to June, not May to June. And Prime Day has become such a big holiday for people. That's why I pulled it out. But looking at retail sales in May, they rose 6.9% from the previous year, exceeding expectations and demonstrating that consumers are still willing to spend despite higher fuel costs. You might be saying, well, yeah, but gas has gone up so much, so it must be because people are spending more at the gas stations. Well, let's exclude those gas stations. Retail sales, they increased 5.4%. I mean, that's a pretty darn good growth there when you look at, again, removing the gas part of the equation. And it shows that spending strength was broad-based rather than simply a reflection of those higher energy prices. We saw online sales, clothing purchases, restaurant spending, and other discretionary categories. They all contributed to the gains. And again, people aren't going to be going to restaurants. My wife and I went to the mall 2 weekends ago, packed. I mean, people are still feeling okay, and I would say they're feeling better than okay. They say they're not in the consumer sentiment surveys, but their actions are showing that they feel good.
Yeah, my wife and I, we go to the mall more than I would like to. Not as much as she wants to, but it's just like, I see the same thing. Stores are packed, lines to check out are long. It's just crazy to me. And the reason why this is such a surprise is because you think if you're putting more in your gas tank coming out of your pocket, well, you don't have as much left over to buy other things. But that doesn't seem to be happening. There's some anomaly here that's just not working out like it normally would.
I mean, we did talk a little bit about the concern with the credit cards and some debt accruing. So, I mean, there is a little bit of concern that, is it sustainable? The nice thing is if energy prices fall back down, well, hopefully we don't see that debt spending continue.
Well, and also, too, housing is also showing signs of stabilization. Pending home sales, which measures signed contracts by existing homes, rose 3.8% in May to the highest level in 6 months. The increase was well above the economist's expectation and marked a 4.8% improvement from a year ago. What makes these numbers particularly impressive is that they occurred while mortgage rates remained above the 6%, and energy prices, again, as we talked about, elevated because of Middle East tensions. Buyers and consumers appear to be adapting to a higher rate environment rather than waiting indefinitely for lower borrowing costs.
And when I look at that too, I mean, we have some exposure in our portfolio to not home builders, not home price appreciation, but home improvements. And I'm not going to say we're going to buy a Home Depot or Lowe's, but I think there is some now credence to look at companies like that would benefit from home improvement. And reason being is I think for years people are like, I'm not going to touch the HELOC because I think rates are going to go down. And I think finally now people are starting to think, I don't know how much more they're going to go down. Might as well do the home improvement project now.
Yeah, and I know one of the companies we have, like the CEO who unfortunately, I think you said retired a couple months ago.
No, he is retiring.
Is retiring. Okay, so he's still there, but he may not be in the next conference call. But I always liked his commentary because he's been in the home industry, I want to say for 40, 50 years. He's an older gentleman, but he had such knowledge, and he goes, "We've never seen this long, like 4 years, of people not redoing their homes, and all that's happening," he says, is that it's going to take more to get back to where they were because your carpet gets worn out more, your plumbing gets worn out, things happen to where you're waiting, you got to fix more, so there will be a big boom. Don't know when it's going to happen, but it appears to be on base what we're seeing here is that people becoming, well, you know what? We're not going to get lower rates. I got to fix, the plumbing or new bathroom or kitchen, whatever.
Yeah, and I think that hope is starting to dissipate. Obviously, we've seen it for years. You went from 3%, gosh, as high in some cases, to over 7-8% on the 30-year fixed mortgage rate. So I think that's why people are like, oh, I think it's going to come down. I think it's going to come down. But we don't need rates to necessarily fall, I think, at this point to actually have a home improvement cycle. I think we just need rates to stabilize. If we were to have rates now fall dramatically, I think people are going to start to think, well, now I can wait again. I think a stable rate is almost more beneficial than a drastically falling rate. But when we're looking at the economy, I mean, obviously, this doesn't mean there are no risks. Higher energy prices act like a tax on consumers, and housing affordability, it remains a challenge. I mean, there's no denying that. But however, the latest retail sales and housing data suggest the economy is far from rolling over. For investors, this is another reminder that here's the key word again, fundamentals often matter more than headlines. While markets may focus on wars, oil prices, and geopolitical uncertainty, consumers, they're still spending, homes are still being purchased, and the economy, it continues to move forward. The big question mark that I have with those comments I just made, though, is how much are people now going to be willing to pay for the companies here? Because that is the issue I have, not the economy, not the business fundamentals, but the valuations are my biggest concerns within the market.
I went to the gym the other day, and this she's like the receptionist, and I think that's what she does. But she talked to me before about investing, and I said, well, do this, buy companies, don't put in mutual funds. So she was so excited. Came in the other day, she goes, well, I bought some companies. I go, well, what did you do? Well, I bought this company. I did a lot of research on it. She did all the research about what the drug company does. But I go, well, what's the valuation? What's the earnings? Oh, well, I didn't look at that. I just looked at what they do. And I go, well, you have to understand the value of what you're paying for that business. It's kind of like I've used this for years. You're going to buy the local gas station down the road. You want to know what their sales are, what their earnings are, what's the cash flow. You want to know all this stuff before you buy that gas station because you don't want to overpay for it. For some reason, when people look at stocks, they see a gambling chip, and they don't care about all this stuff. They just, it's going to keep going up. Why? I don't know. It just will.
It's such a good point, because if you're looking at buying, like, let's say a local small business, you would want to know, like, what are the cash flow? What is the earnings? What are the sales? And you're going to assign a multiple to it. But with stocks, you're so right. It's like, oh, yeah, no, it's NVIDIA. Okay, but, how much are you paying for? And it just really creates such a disconnect in my belief than what should occur.
And this is why people say stocks, right now, stocks are great, but they will go down. And then people say, stocks are so risky. You shouldn't invest in stocks. I've heard this many times in my career of 40 plus years. People say they're so risky because when they go down, they don't understand. They did a silly thing by just buying a business, paying whatever price they can for it, and then just hoping it goes up because they have a great product.
Yeah.
You need more than a great product. I mean, I've seen businesses where your parking lot is full, but it may be full, but if you're making no money off of those products, you're not going to stay in business very long.